Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. This stream's about integrating Bookmap OrderFlow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's no cost to visit the Trader Lab. And please remember, this is for educational purposes only. It's also based on structured trades that are available to everyone to reverse engineer. The idea of the Trader Lab is to help traders build out and understand the business of trading. The business of trading is very much a statistically based business. So we, as retail traders, we tend to try to solve for randomness, looking for certainty. And I always need to start with this idea because many of us spend a long time trying to get our indicators to translate market behavior. However, market behavior is much deeper than that, and our indicators are only following derivatives of price around. So if we can understand order flow, market mechanics, we might actually be able to be better competitors when it comes to interacting with the other participants who are more indicator based. And of course, we all have winning trades no matter what process we use. In fact, we have winning trades even without a process. So that ought to tell you that maybe having winning trades without an edge is just part of gambling. And having an edge actually can, then, as they say, stack the odds in your favor. I think that's logical, yet most of us aren't trying to solve for that. So this is why Trader Lab exists, is to help you integrate market mechanics, how the market works, why it does what it does, and how at times to get in alignment with structured trades that have a statistical edge. Now, the element to this, and this is why you should visit Trader Lab, is that each individual trader finds the time frame or fractal they operate it. Some traders are going to look for the range of the day, going for targets that have statistical probabilities. Other traders are going to trade rotations. It doesn't matter what you do, as long as you can have a tangible statistical outcome that favors you versus the other side. And yes, you're going to pay the other side because the casinos pay the gamblers. But if you can change how you feel emotionally about paying or overhead and cost of production, which every business has, then you will understand that in spite of the overhead, whatever that is, just like the casinos, that over time, with an edge and the ability to actually interact and execute that edge, so establish the mental discipline to deal with your fear. That tangible aspect of statistics gives you a tool to better manage your emotional states, which are triggered by chemicals, fight and flight in the brain and all that. It's our primal wiring. So you need to learn about yourself. You need to learn about your psychology and the wiring that causes you to seek to avoid risk, which is really good for survival of the species, but maybe not so good for trading, where we have to seek risk and run towards the burning building instead of away from it. So those elements are really what the Trader Lab is built on, is to help you understand the business you're attempting to be in, the impediments, and maybe some of the solutions. And of course, you have to bet everything for yourself and find what rhymes with your psychology. And I hope you'll find this useful, and the Trader Lab is available to everyone. There is no cost for it. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, this is not a trade calling room. This is for educational purposes only. Now, today, as we say, is maybe one of those days. And one of those days, to differentiate from other days, today is a challenging day because of the current condition of the market. Now, this is a higher time frame. It's an intermediate time frame as you think of it, and what you're seeing here is volume profile. Volume profile is not complicated. It just, if you've not seen it or worked with it, it looks like you landed on Mars, but it's very simple. The market is an auction, and the idea of what the market tries to do is figure out what's too high and what's too low. How do you like that? And what's a fair price? It's the same as what you do in the store. So if you're a shopper, you already understand how the market works. What you probably don't understand about how the market works is the purpose of the market and why it comes to certain levels and then has behaviors. If you can learn that, and even though the market rotations in and of themselves are random, at times you're going to be able to identify structures that give you an edge once you vet them. And then there's triggers and order flow and the rest of it, which is what we use, an order flow tool like Bookmap for, to kind of get down to the granular level. Now today, well, let's talk a little bit about what happened here. We had Friday with the news that the credit was downgraded by Moody's. We had our high volume. That yellow line is the retail price, our highest volume in this day. And at the end of the day, it did the dive and came down. Then, day before yesterday, we had the gift that keeps on giving. I did a webinar on this one. We open lower, take the stops out here. We don't get here, which is the target. At least for me, it was a target to get long. So what happened here was the market opened, went down. And for me, it was longs only on this day. So we had a very good day this day. And so did a lot of traders in TraderLab. But, getting on the long, at least for me, I had to wait for counter rotations. Then yesterday, we have something called an inside day. Now, if you remember yesterday in the stream, I said, well, there's a couple possibilities. Inside day was most likely, but always a wild card to come across the range and take this out. But who knows? Now, the yellow line here was the retail or highest volume price on this big up day. So yesterday on the inside day, what was too high? The retail price from the big up day, that yellow line. Now, inside day, and an inside day is a two-sided trade. It was a really sloppy trade yesterday. And this now is the retail price. So here's what you see. Retail, took it out. And by the way, why did we come up here? Because the high of the day from Friday was there. What does the market tend to do? Well, market tends to take the stops out on both sides. And it certainly did here with an outside day. Everybody had a good time. Now, yesterday, we had what's called a neutral day. And a neutral day is two sides. In other words, you take out the first hour's high, first hour's low. Now, the interesting thing about yesterday, it set up shorts from here. And then, whatever. And it was a mean reversion day. Mean reversion is an outside-in process. So pretty much what you need to be thinking about is rotational trading, and it's called mean reversion. So this sets up today. Now, I'm going to just zoom in a little bit to this. So there's stops under here. This is the highest volume price in this consolidation. The market tends to be drawn to these areas. What do we know? There's stops under yesterday's low. There's stops under here, and we can go there. We get under here. There's stops under here. Notice how the market tends to, when you have an inside day, it tends to get inventory if the trend is up. In other words, we take out this low, we close higher. We take out that low at the retail price, yellow line, and then we go higher. And now we're inside. What does that suggest? Take out this low and maybe go higher. So that's the trend. But part of the joy is how does it do it? Where does it do it? Even does it do it? Part of the thrill of the whole thing. Now, something a little different to look at for this astute audience. And thanks for visiting TraderLab. Here's what is going on here. Let me just see if I got the right thing here. This is ETH and RTH. I just got to get my brain oriented here a little bit. This is today's ETH. Yesterday, I believe. Let me just get my brain oriented again. Yeah. So this is Friday. And this was the retail price at the high of the day. I showed you this on the higher time frame. I want to let you see how this might work. And we close down here. We gap lower, take out the stops, and come down, get the stops out, and this is in the ETH. Then in the RTH, we open, test the highest volume price or the retail price in the ETH, and then this is our big up day. And the retail price is here. And we take the stops out over here, part of the thrill. Then we open. Oh, I'm sorry. I get confused because I got ETH here. This is the ETH. So we open above the retail price, overnight high, and then in the ETH, we come below it. That might be saying, and this is for yesterday, too high, ETH high, too high, and then the retail price from the big up day, right here, in the ETH, and we close here. Then we have the RTH open. What do we test? The overnight volume point of control, and yet this Friday's retail price, high of the day. I'm not paying that. Sets up a short. We come back across the range. What do we test? This is yesterday's RTH. Too high. I'm not paying that. So basically, too high, outside in trading. Outside, come back in. Then what do we do today? This is ETH. We sell off. Where's yesterday's low? Basically, it's here. So now what this sets up is 35. We have what's called a low volume node in the ETH. So think of this as a distribution. And the dividing line is right there. So then we have this. And the retail price in the ETH is here. So that sets up. Take this out. Sorry. Take that out. Overnight low, possibly, and get under yesterday's RTH low. And then now this is very critical for what we might do. We might continue lower, get these stops out under here and lower, or we do something called mean reversion. Now, the other piece to this is right here is something called the value area low. And it's around 52. Currently, in the RTH, right now, that's the high of the day. If we can't get back in here and get back to here, then we can go down. So we're kind of right at that location. I wanted to show you some of this so you kind of get a sense of the lay of the land. And here's where the 35 is. Here's the overnight volume point of control. Here's yesterday's low. So we open out of value, out of range. It's a gap. Okay? And we have yesterday's low here. And this is the higher time frame attractor, or the highest volume in the intermediate time frame. So the market has a tendency to come back, take stops, and come here. And when we open down here, it looks to me like we want to be thinking shorts because I'm outside of yesterday's range. Now here's what can happen. All of this is before the open. And by the way, if you have questions, post them. I'll do my best. Okay. One moment. We have to get into yesterday's value area. So we're kind of sitting there right now. So this is one of those key moments. If we can't get into yesterday's value, then it's possibly will fail here. And I have no opinion. But that's yesterday's value is all the way here. And currently, we tested above it. So we're inside of yesterday's value. Actually, it's around 51.52. Where are we? Losing it. Yes. So here, this is where we need to get through to continue here and then possibly squeeze out the shorts from yesterday. Okay. Because we didn't get, so that's kind of the lay of the land. But if we can't get in here, then we may revert again. So that's the structure. Now, what happens, happens. They say what happens in Vegas stays in Vegas. That's the same thing in trading. So let's go take a look. Now, initially, because we had opened in a gap, for me, and it doesn't matter so much what I do because I have my own plan. So initially, I was trading on the short side. And I was trading because I was trading something called mean reversion. Now, it turns out that, the longs or the responders had more muscle than and it doesn't matter what I think. I just know that I can fill the gap. I can test these areas and I can be shorting these. I can also look at 35, which was a low volume node that was too high, and I can be leaning on this for reversion. So I was just trading the short side. Doesn't matter. You can trade either side, subject to your plan, and there's no right. The thing about trading is there's not necessarily a right way to trade. It's just edge. You might say, well, if you got long, it would have been better. Yeah, but that wasn't my plan. So I just traded my plan. Here's what we know. This is called a variable high volume node. And it's the first measurement for me of value. So in the store, when there's high volume, buyers and sellers do business there. Now it's the RTH open. It starts at 0. But right here, if price moves away and then I pause, I have more volume. It's logical here than I had down here. So this is suggesting that the buyers and sellers, even though they're interacting, that valuation or retail price is moving higher. So that is suggesting to me higher. Now, higher doesn't mean get long. It means I have to monitor this if I'm going to be looking at shorts. And then I'm monitoring liquidity and other elements here and the gap. Okay. So I'm looking at this. I'm saying, okay, it's going up. Fine. Where am I going to get, where am I going to participate? It's a great question. So let's keep monitoring this. Now, what's really important about this is we have to get into the value area from yesterday, or else it's going to set up shorts. So, and it's not a recommendation. Things change on a dime. This is trading after all. So it's really a narrative of what might happen, not what will happen. So, and I know if I'm under yesterday's low, this is a key location. If I can't get back in the range, and in the ETH, the overnight volume point of control was too high because I'm under it. If I can't get back and recapture this, then I want to be short. So this is why I was taking shorts. And we'll take a look at all this. So my first short was in here. My scale has to be here because this is where it was too low. So I'm getting short. I'm looking for a scale. Now I see a sweep here, and I know right here I have to be really, as they say, Tom on the spot. You heard Johnny on the spot. Because the sweep suggests a counter rotation. So let's watch. This was my first trade. Scale was right here, right ahead of here, actually. I always give it a tick or two. I got my scale, and then I got taken out of the trade, so it's a scratch. Kind of thought I had it right here. When we took this other shot down, I said, no. So, out. Now, I'm still testing the range, and I still have a good probability of getting here. I see my liquidity come in here. Now, this is really an important level because it's the, yesterday's range. So in responsive buying, which is what this is, in other words, gap lower, buyers come for it. And right here also suggested a long, but I can't do anything on the open. Too fast, too furious. So I now have resistance here and here. So I'm still monitoring this for shorts at this time. Right here, I'm looking at this. This is my area. I see the liquidity. I'm looking for a trigger. No trigger. Now, 35, important level from the ETH. This is my next level, but the teeth are chattering because I'm getting inside the range. I'm above the overnight volume point of control. And to go lower, I have to get under this. And then we had news. This is the news that the EU is suggesting let's drop all tariffs, and that was a news-based event. Now, when this happened, I saw it as an excess. It was news-based, and I took a short. So I took a short here, and I was going for this. This came up, and this is my new retail price. And what I'm observing in all this is that the retail price is moving higher. So, and now I'm inside yesterday's range. So I'm having a lot of conflict with this because I can see it from both angles. One part of it is saying, we're coming back into that range. We can push higher. The other part is saying to me, well, maybe we have an excess on the news. And since we came back under this outside edge from the ETH, and this was a news event, this sets up a short for me. Now I'm trading something called mean reversion. Other traders in TraderLab are just long, Isn't that interesting? So let's watch. So anyway, that's a short. Now they're not shorts for anybody. They could be longs, So you can so the trade for me was a short. And now I have to get under this, and this was too low. So it sets up a scale for me down in here, and then I'm still trying, and I was posting in TraderLab this morning, this is really important. Can we hold in the range? And that's kind of the element of this whole thing. Or do we come out? So I get my scale here, I pull back here, and I'm going, all right, got you now. And then I'm monitoring to come under, take out the first hour's low. So this was a short, and 22 was a key level because right here we had absorption. The buyers took control here. So I knew based on this absorption here that I needed to get under this and this 22. So 22, this absorption back to here, too high, and then come back down. If I get under here, I was looking for this. So that was my short. I'm just saying that was my short. And then, as they say, absorption here, no clue, and then I got taken out. Okay? At that point, and I taken out in a trailing stop. So these are all good trades. And then it's, here we go, back in the range. And then this sets up, once we come back in the range and regain it, then I'm off shorts. And now I have to get long. And I do not have a long until here. And this is called the IB continuation trade. So what happened was, once we got above this and this, then it was look for the retracement and then look for longs. This is a structured trade. And here's how this one works. And the target is here, yesterday's value area low. So this trade was pullback long to there. And this is the last trade I took because the stream starts. So it's just really here to there and then out. Trade's done. Now what? We get VPOC migration. This again is supporting higher prices. I would be long again if I was not streaming. Got to mark this variable high volume note. So what's the language here? The language is too low. Once we got above the news, break, it becomes support. So this is the first long for me. Pulling out here sets up another long. It's mean reversion. So it's outside in. This is when I was going short earlier, I was doing the opposite. I was taking the shorts back to the mean. And when the context changes, then you're going to point the barge in the other direction. Outside in. Outside in. And then if we get in here, we have the ETH high. If we do, and we got to get inside, we have this ETH high, and we have value area high, and we have coming out yesterday's high. These are not recommendations, they're just possibilities. And you always have to kind of trade your fractal or rotation. So for me, today was, it's fine. Remember, the trend is up. So for me, lower outside of range, let me give you some statistics. Getting to the overnight volume point and control is 85% probability. Getting to the ETH low is 70%, which is kind of where I was aiming the barge. Taking out the first hour's high, though, is 67% probability. Taking out the previous high or low is 64% probability. Taking out the previous low is 64% probability. So we got some of those statistics. Getting to the previous value area low, 44% probability. Getting to the previous value area, got to find it, lost it. Previous value area hot. It's 16% probability. So I was kind of trading with the statistics as long as the context supported it. The context has changed. Now I'm trading the structure. Here's the key piece right now. I have to get in here to get over here. If I can't get in here, I'm going to rotate back down again and possibly come back here. Now, since the higher time frame is up, I'm inclined. Now, the word inclined is not anything more than inclined because of higher time frame that we will get here. But if I can't get into this, then I can come back all the way back. So in the trade plan, it's going, and here's one more piece. We had what's called the neutral day yesterday, and all that's a profile term, and all it talks about is when you have both sides active, each side can extend the first hour's range, which is called the initial balance. And if we come back inside or in the middle, it just says, yeah, both sides are active. Nobody's really in control. We're consolidating. And that was yesterday's inside day. Now, today, we can take out the extremes, either side of the inside day, or both sides, or no sides. But typically we'll take out one side. Now, we got yesterday's low, and we got the stops out under there. If we can get over the ETH high and back here, that would say that we're accepting. But this is really important. This is the obstacle. Get in here, then here. And we have statistics for the ETH high or low. Well, we didn't get the ETH low. ETH high or low has a 91% probability to take one of them. And while the statistics favor the low, because the higher time frame is up, you got to kind of turn your brain around. So these are the kinds of things that statistics are only one piece. The number one piece is something called context. And the context went from down or initially a lower open, responsive buyers. Now, responsive buyers, they are, quote, responding to the lower price. They see it as undervalued. The thing about this is yesterday's value, the outside edge was right there. Is this valuation too high? Question mark. Well, it seems it might not be, but until we get up here and come out maybe out the top or not, it's a question. However, structurally, in the Trader Lab, this is still a long unless it fails. So the IB, this behavior in here is long, are longs, and you got to get over here. So you know the lay of the land. This is a sweep. It said counter rotation. If I come outside, I go long. If I can't get in here, hasta la vista. Thanks for playing. And don't forget to get the coupon to the buffet. So now you know where we are. And VPOC migration. So this now is the fair price. Now that doesn't mean if it's unfair that we won't come back here. Now there's a couple other trades in Trader Lab I'm going to tell you about. How do you trade this thing? Great question. Well, first of all, the structured trade is it's called the IB continuation trade, and it's an outside in reversion trade, and you're looking for, again, for this. But I have to get in here, and right now it's the high of the day, basically. If I can't get in here, this can rotate down and possibly fail. And that's not a recommendation. I'm just telling you what it might do, and I don't have an opinion, except my opinion is the possibility to come here and even take out yesterday's high. But we did take out yesterday's low. So taking out both yesterday's high and low is, got to find it again, about a 9% probability. Past performance not indicative of future results. So there you have it. So you deal with statistics, you deal with locations, and you try to stay in alignment with the conditions. And then, based on statistics and behavior, you try to get in alignment. That's the best you got. So at the moment, it's longs. And if we fail here, then we can take the stops out under here and fall out of this and come back lower. So we'll see what it does. That brings us current. Now, do you guys have some questions? Put them in the chats. I'll do my best. I'm just looking here. If you're in YouTube, please give a like. Also, if you have a question, I'll throw them in there. I'll do my best. There is a delay in YouTube. In the Bookmap Discord Trader Lab community, streaming in there also. That's in real time. And there's a link in the bottom of YouTube, by the way. If you want to visit Trader Lab, there's no cost for that. Oh, hi, Aaron. Well, the best way to collect the statistics, we do data mining in the Trader Lab, and those are available. There's a document section on defining context or the current condition of the market, where it opens, and then kind of based on individual trade plans that must be vetted by each individual trader, and that is about alignment in the, quote, time frame or fractal. I don't think of time. I just my own thing. I don't try to fit the market in a box of time. I just look at rotations. So whatever it takes for this sweep, this sets up a structural short only for a rotation. This sets up a long for a rotation back to where the sellers took control, which is up in here. What is this? If this is too high and that's my resistance, then what do I get? Rotation. So the thing about this is, I know my buyers are here, and I know my buyers are here. These sellers were absorbed. These sellers were absorbed. It's an outside edge. So as long as I'm above here, and I can come down and pick these guys off, the stops. But if I stay out here, I have a chance, and that's all I have, of going, but I gotta get in here. So I have a chance of extending. If I can't get in here, it spells trouble for the longs. So that's what I know. And I'm not here to say it's going to be this or that. Only thing I can do in trading is say, well, it might do this, it might do that. Now, I'm not forgetting or ignoring in the higher time frame what's going on. Yesterday's settlement and retail price, which is here, we rejected it so far. Now, this is the ETH. Now, if I've come across the range, I have the ETH high, and that's not far away from us. So there's going to be stops sitting here, stops sitting there, and stops over yesterday's high. So if we can extend in here, I can get these guys out. And the shorts from here, you see. So if the market finds too low, then it's responders. Oh, this is a great deal. So I have responsive buying. So in the value area low, which comes from here. In other words, this is where value was yesterday. Sorry, I'm losing my mind here. It was here. Yeah, it was actually there. This is so far the high of the day. So if I can't get in here, I can reject it and go back down. Now, since we're in a higher time frame up move, and I got the stops under here, and I think I got them here. I have to go look again. I can come up, take this out, and take these guys out. So the possibility is to come outside, or at least get here and test it. So far, that's the higher time frame. So if I come back to this, and this is the new retail price, all I've got here is longs. But I got to get through here to get the targets above. So that is basically what we have. So what is this called? If we think the trend might be up, notwithstanding this, then it's outside in, or this is called mean reversion. So it's outside in structured trade, outside in structured trade. Where were the buyers? There. Absorption. So the buyers are absorbing here, absorbing there, absorbing there. Let me draw you a couple little lines on here. I want you to see, if I have an absorption and I see my buyers, if I pull back to where the sellers got run over, which is there, then that becomes support. If I pull back to it, it becomes support. Okay? These are longs. Now, again, where am I trying to go? I got to get through here. And that's going to set up this, and maybe, and I always say, maybe, and this. And if I can get above there, this, and then out the top. So we'll see. So we had responsive buying. And the key to responsive buying is two elements. Can we get into yesterday's range? And for a while, it was touch and go. We'd get in the range, we'd fall out of it. And that's why I was kind of trading. I was trading the short side, because I knew if we fell out, it could be a great opportunity. And then when it came across, then for me, it was longs. And my last trade was out to there. And if I wasn't streaming, I'd just be taking the longs and still working this, and then runners out here, and maybe further. Can you guys kind of see the rationale for how to trade a gap with responsive buying, and then where the tests are, and then depending on the behavior, you could be trading from either side, but then you also define change, and then you determine which side you're going to stay on. And then now, at least for me, it's the longs. Unless we fail, we fall back in here, then I know the longs that have their stops in here can get taken out, and then we can counter rotate. If we do come down, then I'd be looking in this area for potential test back up here, if it happens. And it's not a recommendation. You guys have questions? Let's see. Well, Lee, the value area low, I'm getting the question, would I consider shorts from value area low downwards or the IBC long more valid? Well, the value area low is a target for me coming up. It's not a short. I only have longs right now, but I have to get here. So any trade I take outside in, I've got to deal with this. So this is at least the scale, and my last trade was actually the exit. But if I can get through this, I've got this. If I can't get into this level, that's a problem for the buyers. Now, I can't tell you that we won't just rotate, because the VPOC, what the VPOC represents is the fair price at the moment. Highest volume for the day is up here. Why is that? Let's think about the auction, what it represents. This is the price where most of the business is being done right now. That means the pricing or the levels below us are too low at the moment. So if I have my volume point of control here, this currently is the fair price. That suggests up unless I can't get through this. So this is sort of the obstacle. But that's the obstacle as far as the context goes. From yesterday, the current developing context, which is right now, it's just developing, says this is the retail price. If the trade is accepting this as the new fair price because volume is being done there, then what was too high? This was too high yesterday. Well, what does the market tend to do? It tends to come back and check pricing. I'm not paying that. That was yesterday. Come all the way down. Come back in the range. Let's come back and let's check this. If I get through this, I get that. And if that becomes too low, I have value area high. The nature of the market is to come across. So we got this, and we got stops. So we'll see what it does. And statistically, it's not high that we take out yesterday's high, but the context in the higher time frame is up. So we got to kind of put these pieces together and not lose sight that we want to be long other than counter rotations. And when I mean long, somebody can be short depending on the time frame they trade, you see. So I hope that answers your question. Well, Athen, you're asking me why I was looking for shorts. Because we were outside of value and we opened outside of range, and I was looking for it to test. And if we can't regain, then it's shorts for me. But I trade mean reversion, so I trade outside in from either side, and that's just my time frame. If you want a position, then you would be looking at the potential for longs. But when you're outside of the previous day's range, you got to be careful in the sense of we can't regain this, then there would be trouble. And we could go lower to grab inventory. So I was kind of thinking that's why I was aiming that way. But once you come back in here, and for a while we were rotating in and out of this. So that's kind of, and I was posting in Trader Lab about this. I says, this is really important, but once we regained this, then I was off. In fact, if you were late to the stream, I narrated my shorts. So you can review the stream. You'll see why I was taking shorts. And then when it changed, I'm off the shorts. Then it's okay. Now I get long. It's just what I do. Doesn't matter to me, you know. So it's just trading, you know. So why didn't I get long? Because I was trading reversion, which is outside in. So I'm not trying to get long as long as I'm under, you know, out in here. So I was trading these levels. That's all. And then it's long. Hope that makes sense to you. It's just my plan. And I'm not saying anybody should do what I do. I always say is each trader finds their groove, you know, their groove. So kind of, it's like a dance partner. You know, for me, my dance partner, I can be trading 10, you know, 15, 20, 30 point rotations when they're available. If I'm trading a shorter rotation, then I'm still doing the same trades. I'm just trading the levels. So that's kind of what I do. And in this situation now, I only have longs. And this is where my obstacle is. And you can see what's happening here. I had a sweep there that sets up the rotation. I get along from here back to here. I pull outside, fair price, and I need to get in here. So I don't mean to be repeating myself. So if this, then that. If I don't get in there, then what? Then south. If I do get in there, then where? Then that. That's what I know. So I have two possibilities. And I'm inclined, because the higher time frame trend is up, that we're going to go up. But just because I think that's what might happen doesn't mean it will happen. So that's why we do things called specific locations, defining the fractal we're trading. A key piece is that this is the new retail price and the market can rotate around it. Now, the thing about this is, if this becomes too high, we'll come down here. If it's not too high, we'll just continue. That's what I know. So if I'm trading outside in, which I think is with the current trend, which is in a developing time frame up, I pick a side, you know, and then I primarily trade one side because I just don't want to be flipping like a flounder. It's too much work. So that's why I was trading shorts early and then now just longs. Now, if it breaks down again, then I'll turn around and I'll start trading shorts. So in the meantime, I'm only trading longs. So there. And this VPOC being located here supports the longs. So we'll see what it does. I hope that answers your question. Costello, the IB extensions are up there. They're just something I want to be aware of, but they're not really targets for me. I look a little bit more at, because an extension zone's like a fib, you know, it's like what good is Fibonacci, you know? To me, it's not worth very much. Spent a lot of years with fibs and many different derivatives of fibs, and I don't use them. It's only because the more things I have, the more, quote, I expect certain things to happen. And there's no way to expect anything in a random environment. So I don't use them. But that's kind of where those extensions were, 1.5 and 2 times the initial balance. Anyway, they're on my chart, and they can be relevant. What's most important is this. And we're not getting in there. So let's watch the behavior. So what the market can do is it can do this. And this is called, if we come outside, this is the outside edge of a distribution. And what happens is, if the market is long, stops are going to be at these outside edges. So if I rotate, subject to my plan, I could be looking for stops to come out, and I can be looking for mean reversion. Remember, I trade reversion. And what is reversion? Outside in. So I'm trading outside in to the other outside, which is here. And then I can just manage my trade, and I'm only on one side because of this. If I fall out of this thing, other than picking stops, and I don't come back here, then there's trouble. So that's all I know. I don't need to know anything more than that because I can't. But I know my levels, and I know what they represent. I still think, that when I say I think something, I'm guessing. But I'm putting evidence together that supports a scenario. Now, the issue with this scenario is this. So I know that this is important. It was no different than coming inside yesterday's range down here. This is important. Once we got in here, then it suggests here. If I get through there, it suggests north. If I don't get through here, this suggests maybe trouble, or at least a counter rotation. And if I fall apart here, and this is now too high, then I got this. So we'll see. It's just not my job to predict what it'll do. This is why in a trade plan, you need to know that you don't know. And the other thing is you always need to manage your trades. And it's still a function of fractal and time frame. I know there's traders in Trader Lab that, depending where they got long, they're just going to sit through all this and not, just leave it. Because statistically, by the way, let me give you a statistic for this. And you have to vet everything for yourself. There's about a 32% probability we get here. And again, that doesn't mean I don't go for it, especially with this moving up here. But I know I'm kind of moving against statistics, but the condition of the market is suggesting higher subject to that. So that's kind of the totality of the whole thing. So now, as a trader, how do we trade this thing? If we know this is an obstacle and this has a 31% probability, but the higher time frame is up, how do you sort all this out? Well, you got to prioritize your inputs. What are the participants saying? They're saying what's below is too low, and the responders are in control. The guys who went, oh, another gift, thank you. But is this still too high? So there's the question. The answer to be determined. Are you guys tracking? Ben, are you in the Trader Lab? Yeah, JJ, yeah, the bond auction. Let's throw a little Tabasco sauce in the market. Now, guys, do not run in front of the stops. Use the stops. If you think you want to get long, you need to be looking at outside edges. Let's try to look at this. Because now what we are in balance. Where were our buyers? Here. Where are our stops? There. Where's our absorption? Here. Where might that take us? There. So, and this doesn't mean you should be getting long here, because you got to kind of do this on the head of a pin, right? So your entry, I mean, this is like so marginal. I would think most traders cannot enter here, because there's your absorption, there's your break, we test it, and this is kind of a long trigger, and you're trying to go here, but your risk would be from your entry. At best would be around 46, depending on what you use for triggers, and your stop would be under here. And you're looking to go there. So if you take a long, you got to scale ahead of this thing. And you need to be aware where the outside edge is. It's down here. Because this is where our buyers came in, and this was our support. Notice where we came. Okay? So the idea of this thing is that if we can get some stops out, this, that we can come back here. This is mean reversion from the long side. Are you guys tracking? I'm not saying you should take it. I can't. But what I'm suggesting to you is how the market works. This is called market mechanics, and I always talk about this, that the market will rotate, and it tends to rotate into stops. And it isn't them, how they say they got me and it's a rigged game. No, nobody's out to get you. We actually get ourselves because we don't know what we're doing and we're gambling. And we all take stops. But I think if you're going to take a stop, it should be the right reason, like you traded an edge. So before this happened, remember, I'm following the auction. Language. No, I don't use any indicators. What's the language? This is the targeting, maybe too high. If this is fair, I can come underneath and come back here. That's as deep as it is. Now I have to see if the buyers that were here and there are still going to be activated if I come down. So too high. If I fall under here, then you can see the flush. If I can hold out in this area, and there's also stops under here. So if I fall out, I have to look where my absorption was. This is where, so I have this. I'm going to put a little box around this, and I got stops under here. So let's see what it does. And why is this relevant? There were sellers here, and it's like Pac-Man. They had a big appetite. So we're going to put a little line, and notice what's back in the book over here. Let's look at this. Whoa. Not easy to draw these things. So here, important. There, important. Here, important. There, resistance. Get above there, then we're looking to come out again back to here. And notice what's stacking over there. Interesting, isn't it? So let's watch the behavior. Now, I can tell you that this is a very difficult trade right here because of range, not because of the auction. The auction doesn't care about range. It's like, and if you're going to try to enter on this, you really got to be good in the sense of understanding how you read order flow. This is an order flow trigger, and you won't get this with your indicator because it just can't do it. Maybe you have something that will. DM me that tells you that you should be getting long here to get there. And if I hold this where the absorption was, and I can clear this, then I'm on my way. If I can't get over this, then not so much. That's as deep as this gets. This is mean reversion. If you can't enter because of range, it doesn't qualify. We have the IB high. This is important. This is where my last long was, somewhere, wherever it was. I don't remember. I think it was here. But yeah, it was there. So again, this sets up a long there, and then either out here and we go on our merry way, or not so much. Though I suspect it's this. So these are mean reversion longs. What I always suggest when you're doing mean reversion, and that's why we call it mean, is that you must write this down if you don't think this way. You must look left. Where do retail traders put their stops? Under swings. And if that's the case, where might the market go to get the inventory? Under the swings. If I know the buyers were here and we tested these buyers and they came for it here, if I come back in this area and I see the absorption and notice the liquidity, then it's a long. There. Are you guys following? This is the Trader Lab. Now, guys, there's no mechanics in the sense of prediction, right? But if you kind of put a case together in the sense of if this, then that, If not, then what? Because that's the conditional behavior. If this is too high, we're going to bounce off it. And this is the retail price, remember, this is a key element, and I come outside, it's mean reversion. If they think the trend is up, I still got to get in here. If I get in here, I got that. This. Maybe this. Does that make sense? Bankroll, you made dollars with the IB high. I think that's always good news. Yeah, Ben, the IBC is legitimate. And I think it was wise sell the value area low. There's no shorted value area low. It's a target. I might answer that before. So the value area low is an obstacle. That's all. And it's a target. So I look at these things and I go, well, where might I anticipate a reaction? I'm looking at levels because I trade the auction. And I know that that's why it was a target, right there, for me. I can remember. I can't remember anything. And now this, with the retail price, the market then goes into something called rotational or mean reversion. If the trend is up, it's only longs, right? So Ben, the IBC, which is, out here, and then you get your stop pick here, is all structured trades, and these are available in TraderLab. Ben, have you downloaded the 60 PDFs of these structured trades that I share? This is what they look like, and they address these things. Now, this is not a trading course. There's no cost for this. Years ago, traders were asking me, what are you doing? And so I threw these together. And they have a lot of pieces in them. It wasn't meant to isolate specific, educational elements. It's multiple elements. The other thing that most traders tend to gravitate towards is being mechanical. There is no mechanics in the sense of one size fits all. In the TraderLab, what I've shared is that the plan changes based on who takes control. And if the buyers, or I should say the responders, which are the buyers, are in control now, then the trades that are qualified are mean reversion outside in longs, with the caveat of this thing. But given that the higher time frame is up, I'm inclined, to get through here and extend, because this was the price that was too high. The nature of the market in all fractals and time frames is to come back and check the price. And if you go up in time frame, what might we be doing? Coming back to check the price. It's fractal. So if this price is migrating because it's developing time frame and it's going higher, then what was my last price that was too high? There, because we left it. What did the shoppers do? Well, if we find too low, then we're going to come back maybe and check, is this still too high? So this is the next target, not a recommendation. But is it logical? Can you guys see? Wow, Zach, you're using the old heat map. New 84. In mean reversion, I'm getting a question. How do I manage my trade? Now, the answer to how it's really the answer of how you manage your trade. But what I do is, if I have, let's just say, an inclination that I may take out yesterday's high, but potentially get at least over in this area, I'm going to trade towards it. And my stop in mean reversion in this condition with the higher time frame up, then my stop would be under here. I'd just be outside because the market has to come all the way. And if I get taken out, I put the trade back on again. As long as the structure doesn't fail. But what I know is this right here was my area. And again, it may not be appropriate for most traders because it's the range to get to this. Now, I don't want to say pretty confident, but reasonably confident that we're getting here. And that's all based on the higher time frame. So that's it. So now the other part of this is, how do I manage my trade and mean reversion? You got a couple choices. You can be managing very tightly and you're going to get taken out, but I don't put my stops here because everybody else does. I won't put my stop there because the market will take those stops out. And who's going to take the other side of those stops? The icebergs. So these guys, 112 stops, 31, whatever. And here's your buy ice. And where were they? We could see them right there. That's the beauty of the heat map and using Bookmap and using OrderFlow. I'm not waiting for an indicator to get me, well, wherever it is. I have no clue. I don't use them. But I can read this. I can look at this. And this is language. So when I'm looking at this, I'm seeing the red bubble. And I already know where the stops are because of the swings. And I know retail trader behavior. Write this down. Everybody. Think like a retail trader. Don't act like one. How many times have you gotten stopped out, under a swing and then have it go wherever it goes? And you go, oh, they picked me, you blame somebody else. How about taking responsibility for yourself? Nobody's out to get you. We do a great job getting ourselves. Nobody has to go after us. We do it to ourselves because we don't know what we're doing and we don't know how markets work, and we can learn it, but we come into this business with a very incomplete understanding of what we're actually doing. It isn't put a trade on and then tighten your stop up, unless that's your plan, and over time that is profitable for you. What I have found, and again, what I find for myself is not suitable for anybody else, it's only me, I have found is that the dollars are made in the bigger swings, not this. I position with this because these rotations allow me to get my risk off so I can sit here and have my stop outside of the noise. And then I'll either give it all back, or, in other words, if it comes under here, they're probably going to come under there. If I can't get back under these buyers here, this absorption, then I can fiddle around. But again, look where I am. See? It's like hitting your head on a ceiling. If we can get through here, I'm going now. And of course, the risk is getting taken out. And if I get taken out, I already know I'll be putting the long back on, unless things really deteriorate. I hope that answers your question. And these streams are available. I think what's good to do here, what's really good to do is watch these streams and stop them and ponder what you see. Take a couple of notes if you find this interesting. What I tried to do is strip the market down to its fundamental. Now, when I say fundamental, I'm not saying fundamental on a simplistic way. Get the debris out so that for me, again, I'm a minimalist. And I used to be at the other extreme, trading systems, multiple indicators, time frames, everything but the kitchen sink, watching the VIX, watching the trend, watching the ticking, all that, right? All in real time. The dollar, the bonds, and it's all integrated. And I thought, I needed to know all that stuff. I've even gotten and I used to watch the correlation for years between the NQ and the ES. And I found that I really, and again, it's only an individual thing. I didn't even need to look at the NQ because I'm trading the ES, and those markets can diverge. I mean, if both of them will go up, but I'm still trading the auction in the ES, and the auction in the NQ can be different. The levels are different. So if I'm going to trade NQ, I'll just look at NQ. I don't need to know about the ES. I can look up and see it on my, I can see it, but I'm not trading the NQ. I'm trading the ES. So I trade the ES. And the reason that I've done that, and I'm just letting you know, again, it's only a personal choice. It's not necessary at all. In fact, you may derive comfort and more edge by integrating both markets and just putting a spread up, and have a spread overlaid here, which you can do with Bookmap. So you can have a line here, which is it's called correlation tracker, and you'll actually see the spread. So that'll run around also. And you might do something with that. I don't. I have. I just don't need it. I want to not have more stuff here. I want to have minimum inputs so it doesn't create suppose I have a correlation tracker and I have a long here, but the correlation is going down. How does that impact me? If I see the correlation going lower, so the NQ, because is going lower, does that cause me not to take this long? You see, that's the questions you need to ask yourself. Can you reduce conflict so you can make it very formulaic in the sense of a process mentally that you can replicate and remove the conflicts? In the casinos, they use something called anchored inputs. That means they remove variables from the game. If they're playing blackjack, they don't change how they do it, right? They just do it the same way. If I put a variable in, and now I'm just making an example. It could be anything. Correlation tracker. Maybe I'm watching the VIX. Let me ask a question about the VIX, by the way. What is the VIX? Now, I know what the VIX is. But what is it doing? The VIX tells me what? The fear is up. The fear is down. What does this tell me? Get long. And the VIX is lagging. If the VIX is ticking up, which it wouldn't be now, it'd be going down. But let's just say if I get a rotation and the VIX goes up because the market's rotating down, what does that do? Does that tell me not to get long on a counter rotation if the trend is up? You see what I'm saying? So I'm only talking about me because I used all those things. And going back to the casino analogy, which is about trading with a statistical edge, how do you measure anything that has variable inputs? I'm going to suggest you can't, because if you have a variable input in a 100% random environment, it's exponential randomness. You're random on the inputs, the market's always random. So the casinos eliminated the random inputs from their games. They play them exactly the same way. The reason they do that is because they can only measure it if they have the same inputs. Because the way the gamblers play the game is random, of course, and the way the cards come out of the deck is random. So what do the casinos control? The way they play the game. So they don't use variable inputs. Otherwise, they just have, there's an old saying, early days of PCs. You might remember, depending on how long you've been on the planet, there used to be a thing, garbage in, garbage out. Have you guys ever heard of that? Yeah, I'm still here. Did you guys, I'm getting somebody tell me you still here. Can you guys hear me in the lab? Well, okay, great. Uh, yeah, Justin, garbage in, garbage out. So you got to eliminate noise, in my opinion, and otherwise you can't measure it. Now, I know I just saw somebody posted about waiting for the bond auction. I can't say that's what it's doing because the market is not telling me it's on the clock. It's telling me it's going up. And I'm going to suggest to anyone who puts superfluous inputs into the mix to rationalize behavior, it may or may not. It's always maybe. But am I trading what might happen at 12 noon, or am I trading what's happening right now? And yes, an auction comes out and the market doesn't like it, and it's a news event, it's going to react to it. So far, we're kind of in park, but we're still leaning this way. So, Willers, as far as I'm concerned, immaterial. Here's the thing for you. Why is the market here? Is it because the market's concerned about the bond auction and we might get a reaction to it? So for me, my plan is about participant behavior. Why are icebergs taking the other side of these stops? Is it because they think the market's going to go down? Now, the fact is the market could do anything, so that hasn't changed. But what is number one? Isn't it the context? What is the context? You got to clear this that way. We don't clear it that way. There's nothing more to know. Hope that makes sense, Willers. So fundamentals to me, not important, other than news, real news, like CPI and PPI. I think there's PPI coming out. It might be tomorrow. I don't remember. But that is material. And I don't trade in those reports. But why would I not be long, Willers? And the best part is, if you're trading and you have a plan, does your plan tell you that you don't take trades that are qualified because of what might happen at 12 noon? Or are you in the trades that fit your trade plan that are in line with the context, which is mean reversion, IB continuation trade? Just a question. If you guys are interested in Trader Lab, there's a link in the bottom of YouTube. There's no cost. This is an open community, but I'm going to caution you. It's a professional environment, and it is about the business of trading. So it's not romper room. There's a lot of seasoned traders in here and also developing traders. This is an advanced trading methodology. It's going to require you, and I mean require you to do work. So there's no cookie cutter, plug and play, which is what most of the streamers and those who are selling product on the internet, the latest guru and pay chat. I'm sure you've all been there, done that. And of course, you can continue looking for the holy grail and the secret sauce, or maybe you could just say, been there, done that. And I think everybody who's been in this business for any length of time, has looked for those solutions. I don't think there's anything wrong with looking. But if you keep looking, then you haven't learned. And the thing about it is we all have trapped equity. All the things that we've done, whether it's seminars, chat rooms, whatever, all the things we've done. And at some point, we're just doing derivatives of a process that doesn't work because we don't have an edge and we don't understand the business. So when we see, and everybody has winning trades, I have to say, if somebody asks me, what is the most difficult part of this business? And it's hard to answer that question because there's a lot of elements to it. It's the random winners we get with a plan that does not have a statistical edge. And that means we're going to lose anyway, even though we have winning trades. And the winning trades are what keep us doing what doesn't work. Isn't that an irony, you think? That idea captured me for years because it was just, let me get more winning trades. Yeah, but there were variable inputs involved. So I was using systems after a while, like about 7 years, I think, I started building trading systems and optimization, walk forward testing, you take a chunk of data, all this stuff. and to have an edge, more winning trades. Well, if you're optimizing, if you will, from over a period that's behind you and the current market is not in that condition, then what can you expect? How about more garbage? So even though, and I did a lot of research, the idea of systems was before I actually got into it, I did a lot of research, and yeah, traders are trading with systems. So I said, I can do that. So I did it. And I still ended up with the same outcome. And then, of course, worked on, and I made my own indicators. I did all kinds of stuff. So, and I won't go into it. I'm just going to say, has been there, done that. Trapped equity. So the more time I spent getting the same outcome, the more I questioned why, and I couldn't figure it out. I just could not figure it out. I'm saying, I think I'm doing everything right. Well, I didn't understand the business I was in. That was the ultimate thing, because I thought it was more indicators to create more certainty, right? It's so logical, and more winning trade. Yeah, but that's not the business. The business is actually something you can repeat that is absolutely anchored. And that's how casinos operate their games. So instead of seeing this as a confirmation being right business, it's really a business of edge and statistics, and everything's random after that, So we're inside of the value area. This puts this and maybe yesterday's high on the Richter scale. I don't know about yesterday's high, but I do know about the probability of here and you'll see how this plays out because we only have a couple minutes left in this. So we might get here if we get through this and then out yesterday's high. It's not a trade recommendation, it's just possibility. So in trading, it's always maybe. Hope you're getting something out of this. And by the way, if you're visiting in YouTube, don't forget there's a link down there to visit the Bookmap Discord Trader Lab community. You do have to confirm your Discord email so we know you're not a spamulator. Keeps the debris out, and you guys can appreciate that. So you have to verify, and then come to Trader Lab. Be sure to download the 60 PDFs of structured trades, and there's a library of webinars that you can watch, some of them up to almost 5 hours long of real-time narration. I mean, if you can handle it, I think getting a Barca lounger and sip a pina colada. This is what the Trader Lab community looks like. There's a lot going on in here. A lot of good traders, career traders are in here, developing traders. It doesn't matter how long you've been trading. We all go through the same stuff. 46. Gamma, discussion gamma. Thanks, 46, for that. So that's the Trader Lab. You can see it's serious. There's no nonsense in here. We don't have time for that, We're all busy trying to get better, and you'll never stop trying to get better in this business. Every day I watch the stream, and every day I'm trying to get better because I know I can be better. And it doesn't matter. I've been doing this 46 years as a professional, as a money manager, and also out here with you. We're all the same. It's just a matter of what can we do to differentiate ourselves from other retail traders, as we know have an abysmal success rate. We can learn from the dollars we've spent for our education. And part of that education is moving our stops, not taking trades, being dominated by fear, not having a statistical edge, not having a trade plan, playing a video game, and thinking that we're going to have an ATM in the basement. Not realistic, in my opinion. Start here. Thanks, Ned, for curating this. In Trader Lab, if it wasn't for Ned, we wouldn't have this organized. If you're going to visit Trader Lab and you're in YouTube, use the link down there. Watch the primer webinar. It's a high-level overview of what this is, the process, a little bit about me, and that's not important. This was done back in 2021. At the time, it was just Bookmap asked me to do a advanced webinar, just hi, how you doing? And then I guess it was like there was a lot of requests that I do more, so we ended up with Trader Lab. They asked me to do it. So watch this, then meet the Trader Lab, This is an advanced trader methodology. However, the word advanced should not mean complicated. It's actually the opposite. It is removing the debris so you can actually have an objective process. This is just an overview of a process, one day in the life. I planned, I saw, I traded. Now, stop gambling, start winning. This is a rather direct stream on what most of us do or are doing or have done. Hopefully you'll put this in the rearview mirror if you're a gambler and go, I don't want to gamble. Because if you're going to gamble, go to the casino, get the cocktails and the ticket to the buffet, because that's about pretty much what you're going to get. And if you can differentiate between gambling and edge, that'll take you a long way to kind of maybe, if you do the work, shed what doesn't work and start building something that over time might allow you to extract the dollars from the other participants. And we're all going to pay the gamblers. Casinos haven't figured out how not to pay the gamblers, so I don't think we can either. So I don't try to. I just take the trades. And trapped in trader Groundhog Day. That's when you are working hard trying to fix it. And you just keep getting the same result. Random winners, but losing. So the winners keep us trying to fix something because we think we just have to make it better. But the fact of the matter is it's still broken. It's just, that's why it's broken. So learn from the tuition you've paid. Don't keep repeating the class. And I think you can get answers if you do the work. And this is going to require you to do the work and maybe change your beliefs about what this is, this business. I think we all come into this business with kind of a fantasy. And now you guys, I think, have it much worse than I did. When I started in business, 1980, we didn't have PCs, we didn't have an internet, there was no domes, there was nothing, and we had floor traders, no algos, nada. And most of it was driven by fundamentals. It was not technicals. Technical analysis was looked down on as voodoo. And I know you probably have a hard time with this, but all my friends were floor traders, and they thought, they thought I was out of my mind. But technical analysis is more classical stuff, head and shoulders, all this kind of stuff. That's the first thing I learned over at the CME. So I had, and that was measured moves. That is what sent me in a direction of prediction. That's what measured moves are. So everything was about predicting. So throw a few years in the hopper trying to predict what's going to happen, and then you find out that there's no edge with that. Then indicators. So I'm just giving you a little background on me. And then eventually I was fortunate enough to start managing money for firms. Then I had my own company, and I was what's called a trading advisor, and I was managing funds, etc. So, and trade, and just got really involved. So it took me a long time to go to develop these things. But I hope you got something out of today, and please give a like if you're visiting in YouTube. Use the link down there if you want to visit Trader Lab. Review these streams. They are sequential. What happened yesterday? What happened the day before? Every day builds on the previous day. The auction is the participants trying to figure out what's too high, what's too low, what's retail. And it rotates. Market gets long, it's going to rotate down. Market gets short, it's going to rotate up. It does it in all fractals and time frames. If you find this interesting, visit the Trader Lab. Use the link in the bottom of YouTube. And in the meantime, support the channel, subscribe, and leave a like there in YouTube, and come by and visit, like to meet you in the lab. Thanks, everybody. Thanks for visiting Trader Lab. Appreciate your interest and support, and I look forward to seeing you guys real soon and visiting with you personally in the Trader Lab. Take care, guys. Have a super day.